Hello everyone and welcome to Spear Trader. In this video we'll talk about what it means to go long in a stock trade and how it works. There will be links in the description to other videos where we cover more topics on the basics of trading, so don't forget to check out those videos if you'd like to know more. Or if you have any suggestions, please leave a comment as to what you'd like to see next. Also, please don't forget to hit the subscribe button and like the video. It's very much appreciated and helps out a lot. Are you subscribed? Excellent. Let's begin. So what really is going long? Going long is the basic concept of what trading is. Buying a stock and holding it until selling it later, hopefully at a higher price. There aren't many requirements for doing this. What you'll need is the money to buy the shares, as well as pay for any commissions if there are any. You also need a broker, usually a bank, but there are other companies that offer this as well. Let's say we have an investor that is registered with a broker and has some money saved up and would like to invest. After looking on the market, they have noticed the company has been doing well lately due to some good news. After having done some research about the company, they like what they see and would like to buy in. The investor then goes through their broker and puts in a buy order for 100 shares of the company. At the time of buying, the shares are trading at $10 a share, making the total investment $1,000. After a while of holding onto those shares, they rise to $15. The investor then goes back to their broker and puts in a sell order for all 100 of them at $15. The investment is now worth a total value of $1,500, making them a profit of $5 a share or $500, minus the commission fees for the trade if there are any. Wonderful, a successful trade for the investor. Now, if the investor kept holding on to those shares, the best case is that the share price keeps going up. There's practically no limit to how high it can go. Sometimes, however, the opposite happens and the share price goes down. The worst case for the investor is that they can lose all the money they put in, since the lowest it can go is zero. With what has been talked about in this video, I must remind you of course it is wise to make informed decisions on every stock trade, since an investor can still lose a lot of money with rapid price fluctuations and unpredictable markets, so it is recommended to be very diligent and knowledgeable before making any moves and understand what the risks are before attempting anything. There you have it. This is as simple as it gets. Buying low and selling high is how you make money when you go long on a stock. I hope you have enjoyed this video. Please feel free to leave any comments below about anything mentioned in the video or topics like it. And don't forget to subscribe. I hope this helps you get started with trading, and I wish you success on your future trades. Thanks for watching.